Okay, good morning and good afternoon. Welcome again to the Washington, D.C. Bloomberg Intelligence weekly call. I just want to say again, happy summer Monday. I'm going to continue to still do these calls on a Monday basis throughout the summer, but as you can imagine, probably less topical items will be popping up just because, as I was just explaining to the folks prior to the recording, that Washington D.C. is pretty empty at the moment, and a great time to actually get into your favorite restaurant or to get into your favorite museum. But, we have a big thing happening this week, and that is the presidential debate between President Biden and former President Donald Trump. Now, President Biden has been holed up at Camp David for the last couple of days and will for another few days in debate prep. But then you're going to see both presidents hit the streets to do quite a bit of rallies after the debate. We also saw President Trump announce that he has said that he has picked his vice presidential candidate. Whether he has or not, I'm not exactly sure. But don't be surprised if President Trump's debate it goes poorly for him, that you see an announcement next week to try and get the pendulum back onto his side. Now, when it comes to the debate, the way that we're looking at it in terms of the investment side is really we'll be watching, but unless either president says something that really dramatically impacts the policy procedures or policy positions, better said, we're not really going to put too much of faith or effort into it. This debate could turn into just a shouting and an argument match. Certainly feasible, and to that stance, there's not going to be any crowds in front of the auditorium, nor are the microphones going to be on for the entire time. The microphones will be off when each president is not speaking. But we'll be watching. The way I view presidential debates in particular is just these are ways to set out ideas. But you always have to remember, if you hear a president say, like let's say President Trump says, I want to bring back Glass-Steagall. This is something that he said prior to his election in 2016. I want to bring back Glass-Steagall. This is the separation of investment and commercial banking. Well, then you have to just put on, what is your Washington hat going to do? Like, how does the president actually implement that? If it's an act of Congress, you need to get the filibuster and so forth like that. So just remember, a lot of these statements come out here, and then as a result, they're just statements. So keep that in mind. Certainly still interesting to watch, and we're going to be watching that. Now, when it comes to the House, what they're doing this week, well, the House is going to be having a couple votes, 3 votes on appropriation bills. Remember how last week I talked about how they're just doing appropriations in advance of trying to get it done before the August recess. They also got a vote on organ harvesting in China. So this is the type of bills that we're not really paying attention to, but just indicative of what the cleanup work, if you will, the House is doing before the August recess. Now, we did see some interesting stuff come out from the regulators just last week on living wills. Now, I want to read this because this is a little interesting. So the Fed and the FDIC found shortcomings with 4 living wills. This is JP Morgan, Bank of America, Goldman Sachs, and Citigroup. Now, a shortcoming is not as strong as a deficiency. So what happened here is that the FDIC and the Fed both looked at the living wills. Remember, this is the plan, if you will, that you would have to present if you're going under. How do you keep the bank, how do you unwind the bank and not cause a systemic risk? Well, it has to be reviewed. The FDIC reviewed it, and in Citigroup's case, they deemed it a deficiency. Now, in the Federal Reserve's case, they did not deem it a deficiency. They deemed it a shortcoming. And some of the language that they've put in here, and you can see the feedback letters. It's on the website, so you can see all this. Citigroup's plan did not add in updated stress scenarios and assumptions. They also said the issues with data reliability had inaccurate calculations regarding how much capital was needed. For example, in JP Morgan's strategy, they couldn't update some economic conditions while calculating the necessary capital. So what that means to me is that that's not something that you're going to get fined over. That's not something that you're going to have an enforcement risk over. That is something that if you're the chief compliance officer or the chief risk officer, and remember, these living wills, these are 10,000, 12,000 page documents, and the plans have to be very meticulously thought of and so forth like that. I think this is a slap on the wrist saying, okay, we did not like what you did. You need to go back to the drawing board. And in this case, because the Fed didn't sign on with the FDIC, there's really no penalty here per se. This is all behind closed doors. Other than the letters, all this work goes back and forth between the banks and the regulators. So I don't think there's going to be much here. The next time we're going to get an update on this is July 1st, 2025, when the next round of living wills would be updated. So it could be a very busy year for those four banks of the people who are working on it. But ultimately, I think it was some scary headlines, but you're not going to see that much further on that. We have two House hearings that are interesting to note this week. One is these are both subcommittee hearings over at the House Financial Services Committee. There's going to be a talk about Chairman Gensler's equity market structure reforms. Now, if you've been following this space, and you know that the SEC put out 5 proposals last year that transform the equity market structure of the United States. The way that we trade equities in the United States really is based off of Reg NMS from the year 2005. But when Chairman Gensler came in, he had 5 significant proposals, ranging from tick sizes to disclosures and so forth like that. Now, they've implemented one, but one of the big questions around Washington is, where are the other 4? We had heard informally from the SEC at the tail end of 2023 that they wanted it all done by April. Well, here it is in June. We're still waiting, and there's really no end in sight. I think a lot of it could be because of the legal ramifications of what the SEC is feeling when it goes to the Fifth Circuit. However, this hearing probably could provide, there's not going to be any SEC staff there, so we're not going to get any intel on this, but it could just give you a flavor of where people are thinking at the moment in terms of where these market structure reforms. And as always, if you ever have questions on equity market structure, we have Larry Tabb, who's our Director of Market Structure Research. He'd be more than happy to talk to you about all of this because he goes much more in the weeds on this than I do. There's a hearing on the Exim Bank of the United States in terms of economic competition with China. As I haven't looked at it yet, but the Treasury just put out a proposal, for example, implementing President Biden's executive order on limiting investment into China. So I'll probably have that out on the terminal next week. But there's another hearing on stress testing because if you remember, the stress tests are coming out from the banks. And normally subcommittee hearings, I usually tell people that you don't really have to pay attention to it all that much because it's not policymakers, it's more people from the industry. But some of the witnesses that they have here from the Financial Services Forum, they have Francisco from the Bank Policy Institute, they have Better Markets and Jones Day, for example. There's a lot of Washington powerhouse in this list in terms of the witnesses. So I'm certainly going to be paying attention to this because if we see President Trump win in November, I do think the stress testing process, if you will be subject to change over the next few years after that. So, it's a quiet week in Washington, but certainly something that that you can pay attention to. And then the last thing to note is I want to talk a little bit about the Supreme Court. Now, I don't cover the Supreme Court because I'm a policy analyst, but there are a lot of people on my team that do. In fact, I'm just going to look. Matt Schettenhelm is sitting 3 desks down. He's got a couple of cases that the Supreme Court are going to put out this week. One is the Chevron deference. Now, we have put out a large deep dive report on what the Chevron deference is and what it means for rulemakings if it were to be limited or to go away. So if you are interested in how regulators implement rules and implement rulemakings and how they will have to do it under a Supreme Court in which the Chevron deference really isn't all that there. And this is really deferring to regulators in terms of using their authorities to implement or to translate Congress and to implement rulemakings on their own behalf. That's certainly something that I can send you a PDF copy of if you wish, because that's going to come out probably on Thursday. There's also cases on the social media usage overseen by Texas and Florida, and obviously the Trump immunity case. That, because of the debate, probably won't come out until Friday. I don't think the Supreme Court's going to put that out right before the debate. So I know that's a lot. Plus, it's also a little, but again, I just want to say thank you very much for attending. Please feel free to reach out if you have any questions, and I wish you a great week. Thanks.